Hey, hi everyone. Welcome and thank you for joining us for our very first webinar ever. We're very excited to have you all here. We are the 4 Group Real Estate team, and today we'll be sharing our outlook for 2026 for the housing market in Metro Vancouver, and also share some key factors shaping the real estate market over the next year. Okay, so at 4 Group, we want our clients to rely on strategic moves instead of speculation. So we want to base that strategy on key factors and market forces, which we will discuss today throughout the presentation. And we also will talk about policies that will have significant role in shaping the market in 2026, especially the housing and immigration policies from all levels of government. Yeah, so the big question everyone always have is this a good year to buy, sell, or wait? The real answer is it depends. It comes down to what are you buying and where are you in the real estate journey? Are you upsizing, downsizing? Yeah, and whether you're a first-time home buyer, if you're like an investor, yes. So it really depends. And we'll go through, yeah, based on your criteria, based on what sort of buyer you are, what sort of seller you are, whether it's a good idea or not. So our main thesis for this presentation is that 2026 is a sorting market, and it's not a boom or a crash. What we mean by a sorting market is that it just depends on what sort of product type that you are buying. For example, if you are a buyer. Yeah, in 2025, it was a very slow year for real estate market in Metro Vancouver. It was like the fewest sales in 25 years, and prices across basically all product types went down around 5 to 10% in Metro Vancouver. Yeah, so but in 2026, we believe it's going to be more stabilized, and there won't be major price movements up or down, like not major price movements up or down. And it's also going to be sorted based on price, the condition of the home, the location of the home, like is in a desirable neighborhood or not, and what sort of product type. Like if it's a studio, probably not going to be too many demand, which we'll go through later in the presentation. Yeah, and well-priced homes in good neighborhoods, desirable product types will still be selling pretty fast. Like maybe not really fast, but will still sell well. And especially principal residence homes. Basically homes made to be a comfortable principal residence, like 1 bedroom and den, will still do well. Okay. Yeah, so these, like for our agenda for today, basically these are the major topics we will go over, which is the macro forces, micro trends, and buyer and investor strategy. You're there, right, Ben?
Yep.
Okay, sounds good. For some reason, I don't see you anymore.
Yeah, I'm right here.
Okay. Yeah, so one of the, give me a second. So in terms of the macro forces, there are 4 key categories that we will talk about. Number 1 is interest rates. Number 2 is unemployment rate, or just the employment market in general. Number 3 is immigration. And number 4 is housing policy. Basically, we always talk about these forces in our newsletter as well. So if you guys haven't subscribed to our newsletter, you can type in your email in the chat, and we will add you to our newsletter. So number one, interest rates. So we believe that for this year, the stability of the interest rate is more important than further rate cuts. And also the Bank of Canada is already indicating there won't be much rate cuts anymore. So this is basically most likely where interest rate will be around, like maybe a few more cuts if the economy really craters a little bit more. But basically what we're getting right now is like the current rate is probably where it's going to be for 2026, like maybe some minor changes, but nothing major. And we believe that this will give a lot of stability to all the buyers in the market. And when you have stability and certainty, that's when the decision return and people will start looking at buying homes again. Yeah, and we don't believe there's going to be price spikes or major price declines either way, just more demand, so more transactions in the market. Okay. Number two is unemployment. So we believe that the employment market is going to be more important than interest rates, because if you don't have a job, it doesn't matter what interest rate it is. You're not going to be able to buy a home. Or if you have really big uncertainty of whether you have a job next year or not, that's really going to affect your decision of buying a home or not, and even selling a home. If you lose your job, can't carry the mortgage, you're going to have to sell your home. Like one of the X factors that could be a big impact on the employment market, we believe, is AI and how it may shape the white collar employment rate and blue collar employment rate. So definitely, if AI is going to be a bigger force of 2026, there may be more white collar employees losing their jobs. And currently, like the youth unemployment rate is already extremely, like quite high in Canada. And a lot of people are already speculating it's because the entry-level job market is really hard because AI is basically taking over all the entry-level jobs. So entry-level jobs, like administrative jobs and jobs that are easy to automate, like copywriting, etc., those jobs might be at risk when AI takes over more and more in 2026. So that could be one of the things that affect unemployment rate, which would affect the real estate market as well. So this is a chart showing the unemployment rate over the last 10 years, basically. You can see that like basically the current unemployment rate is not that far off from 10 years ago. And it's not as bad as obviously during the COVID times, but it is not as good as around 2023. That's when the unemployment rate is the lowest in the last decade. And the real estate market was doing better. Okay, so for immigration, so in Canada in 2026, they're targeting around 380,000 permanent residents, and they are focusing on economic classes such as skilled workers and PNPs, and they're significantly reducing the temporary residents and students, so the low skilled workers and foreign students. So it's definitely going to affect the rental housing demands and rents, because people were expecting, like at the peak of immigration, like to continue. And actually last year, at the last quarter, I believe, not I believe, I checked, like actually the population decreased by 0.2%, like the first time in a long time that the population actually decreased in Canada. Same as BC. Like, however, immigration policy is basically always being adjusted to make sure the economy is healthy and supported. And housing is like the biggest economic driver in Canada. So if I think the demand keeps declining, the government will have to bring in more immigrants. And I think, Ben, you mentioned that one of your like immigration consultant connections, they were saying they're actually making it easier to get like
Yeah,
immigrants to come in.
they kind of drop the requirements a little bit lower requirements, so people can get the application approved a little bit easier than before. So I believe
Right,
they kind of want to loosen the policy a little bit to get more people to come into Canada a little bit sooner.
right. I guess like certain like of these policy changes, like they don't announce it, but it's actually like having an effect on how fast people are coming in. Yeah. And like we believe like there's always going to be immigration to Canada. And like it's not gonna like the lowering of immigrants, it's not gonna guarantee affordability. But since like they're constantly adjusting the immigration levels, it's always going to keep a floor like in housing, because if the housing is really slow, they're going to have to bring in more people. Otherwise, the economy will crater as well, since Canada's so reliant on housing. Yeah, so these are some of the numbers that the government of Canada is projecting for 2026. Around 380,000 for both temporary residents and new permanent residents. So you add those up, the total new arrivals will be around 765,000. And out of that, approximately 15% goes to British Columbia. And out of all the people coming to British Columbia, 80% of those will come to Greater Vancouver, where all the jobs and action is. But this doesn't account people who are leaving. And yes, so like, for example, last year, actually, the net population actually decreased a bit because I guess like from death and also from people leaving the city as well. Okay. So housing policy is very important as well. Like we always write about it on our newsletter. Whenever there's any new zoning changes or any densification that the city, provincial government, or the government of Canada wants. Yeah, so we believe like even if there is zoning changes, it often takes many years like for the actual supply to come on the market. Because when you densify in an area, like the whole process takes a long time. Like Ben used to work in land assembly a lot, and he cannot really understand like how long the process takes, right? Ben, like from just an idea from like a zoning change to actually like tower that like people can move into. It takes like a long time.
Yeah, especially you like for
Mm-hmm.
example, if you are familiar with Wechat area, even though they got
Mm-hmm.
the chemical of phase 3 approved, like I would say almost about 9-10 years already, but you don't see too many towers um, right now. It's just not because the zoning was changed recently. It's actually been approved a long time ago. But however, if you start seeing the new buildings up, it's actually the zoning got approved like many years ago. The reason for that is because there's a lot of things need to be ready before the high rise is going to build up. Like for example, like um, when an area they got lots of people gonna live in there, like for sure that they need a hydro, they need gas, they want to make sure the school there's enough park, green space, the traffic gonna be okay. Um, it's like a whole
Right.
package thing. Okay, we also we also call it like a offsite upgrade as well. It's just like a whole package thing.
Right. Yeah, and it takes a long time for the process to go through and for actually housing units to be available to actually move into. So just because they change a housing policy right away doesn't mean the end user of like the actual condo buyers will change much. But we believe that actually, like when you announce a housing policy, the landowner may benefit right away. Right now, I guess not as much because there's just not much development appetite in the market. But usually, when they announce a like new housing policy to densify a certain area of land, like close to SkyTrain or whatever, usually the landowner, like the single family homes that are within the zoning change, they will get a big boost in value before the actually buyers of those condos, because it just takes so long for the process to happen. Yeah, so in summary, like all these macro factors will really create like a strategic framework for the buyers and sellers. So I think it's always good to pay attention to the macro. And for our newsletters, like whenever there's a new policy change, whenever there's an interest rate change, any immigration policy changes, we will always update our newsletter subscribers. So yeah, definitely subscribe to our newsletter for the latest information on the macro and micro, which Ben will go over right now. Yeah, take it away, Ben.
Okay, yeah. So we're going to talk about some micro effects about how they're going to affect the real estate markets in Greater Vancouver in 2026. But first of all, like people have to understand, like condo usually means just like an entry product, and townhome usually means people can upsize from the condo to a bigger home. Like normally we say going to be a townhomes or duplex, so more like a move up product. And for detached home, in general, it means more luxurious for the homeowners to have in Vancouver, because the land is expensive in Vancouver, right? So next we want to talk about what the buyers, like how they behave in the recent years. So of course, you might see lots of buyers. They are actually going to be more smarter than before. The reason for that is because there's a lot of tools online, a lot of information online, so they can do lots of research themselves. And plus, there's going to be AIs. So normally, if you want to ask some yes no questions or some facts, if you ask AI, they can give you the answer like very quick and I would say quite accurate as well. So which just means they will get lots of informations when they really want to spend time to do the research themselves. So, but the bad thing about that is because they got lots of informations and are actually going to make them to make a slower decision, because they have to digest all those information themselves. And then they because the market is kind of slow right now, lots of home lists for sale, so the buyers will have so many options, so they can choose, compare, they can ask friends opinion, ask the family, they even ask different realtors for different inputs. So that's why you'll see the buyers right now, they're smarter, they're slower, and they're more selective. So for the sellers, I would say, because we already talked about how the buyer is going to behave right now, so which is mean going to give the sellers much more challenge to how they're going to sell their home sooner. So the first 2 weeks are going to be very critical, because once your property lists online and you want to track the attention, because normally the first 2 weeks you will got the most traffic, because the system normally, let's say if the buyers they're regularly going to check on the markets. Sometimes they will ask a realtor to send them like a auto notification whenever there's a new listing that match the criteria. Um,
Right.
is listed, then they will fit to their email right away, right? So when they see the listing and then they see the pictures, all the criteria that they like, they will just want to come and see the open house. They want to check it like right away, um, and that is the best time for the seller to expose their home to all the potential buyers. So, but the thing is, it's like you have to be um, because some sellers, of course, they don't want to undersold the property. No one wants to, but sometimes they have to understand that if you're going to be overpricing the property too much above the market price, and you're easily going to lose the hits, and the buyers might be thinking that okay, these sellers, they're not in rush, they're not ready to sell, they're still fishing, then the seller might lose a chance to sell it. Yeah. So of course, if as a seller, if you have some quality homes that you really want to cash out, then we would still believe that those criteria will help you to win in today's market. Like for example, the layouts. When we talk about the layouts, is talking about like for example, for the two bedroom, let's say two bedroom plus stand. Some condo they might have like over like a 1,000 square foot for two bed and then, but some of them only got like 800 to 900 square footage. They also got a two bed and then, and then no wasting space.
Right.
So if you compare like A to B, like if it's like a similar criteria, then buyer will tend to buy maybe the smaller two bed, like an 800 to 900 square footage instead of the 1,001.
Right.
And for the location, of course, you probably locate in a more quiet neighborhood, like inside streets, rather than on the arterial road. For sure that yours probably will sell much sooner than the others. And the last one going to be livability. Like this one's a little bit tricky because in the recent year after COVID, the inflation has been really bad. I'm not sure you have that feeling, David. If you're gonna live in a neighborhood that's just close to restaurant, grocery that is actually cheaper, let's say downtown and Richmond, right? If you live in Richmond and compare living in downtown, like which city you think that you would have a better livability? Obviously going to be a Richmond, right? Unless you really have to live in downtown because for the job or somewhere. But if you have the option, let's say you work from home, if you can choose a Richmond, then I would say that this is going to be a much better livability that you could have.
Yes, I agree. I like Chinese food as well. And also no parking. That's really good. I like how you don't have to pay for parking in Richmond for the most part. I guess it's a little bit more pay parking nowadays, but still better than downtown.
Yeah, so that's why like people, they got more options. They start looking at all the different kinds of things to choose their home.
Yes.
Yeah. And then next we want to talk about the pre-sale and resale. Like back then, like lots of people, they want to buy pre-sale. The reason for that is because they want to lock the location, lock the home that's going to be complete in the next 5 years. Because they worry about that if they miss a chance to buy, and after 4 or 5 years, the home going to be more expensive, right? But at the same time, buying a pre-sale, you will have much bigger risk. Because when you buy the pre-sale, of course, you already see the price, you locked in the price. But the market goes down, then obviously that you lose money right away on the paper, right? But if the but of course, the other way is if the market goes up, then you kind of think that, oh, I did a good decision that I locked in the price earlier. But that's the risk. If the market is not doing well, then of course you will lose the money on paper. And also lots of terms like the assignment terms, because most of the contracts are actually going to favor the developer instead of the home buyers. So make sure that when you buy the pre-sale, you have to looking at those terms, especially at today's markets. The economy is not doing very well. If you still decided to buy a pre-sale nowadays, then you have to make sure that you're gonna understand the risk that you're gonna buy the pre-sale. Like I mentioned, the assignment term, if you cannot assign or a super high assignment fee that if you really want to assign it out, then you know they're going to be very difficult for you to exit. Yeah, but if you find it resale, then of course you already see like what you have, then you can make the decision based on what you see. I would say it's going to be much safer to buy the resale than pre-sale nowadays.
And sometimes when the price drops, like there might be some closing risks, right? Like if like I think for most of the products are not going to be too significantly affected, but recently all the super luxury buildings like in downtown, like when they do like a big price value decline, it's hard to even close on it, right? Because they have to put a bigger down payment even.
Yeah, because let's say you're going to buy the expensive condo in downtown, and you need to borrow money, right? So the bank will send an appraiser to appraise your condo and see how much it's worth at today's market, and then they set a ratio, let's say 60% of the market price, then they will based on that price to loan you the money. They don't care about how much you pay at the beginning, right, or the contract. It doesn't matter,
right?
So if the purchase price and the market price is going to be like a huge difference, then some bank, they even turn down, they don't even want to lend you the money because it's high risk.
Or you have to come up with a really big down payment or pay basically the price drop, like whatever the price drop, you got to come up with that amount at least.
Yeah, if you can complete, then the developer might sue you as well, like breaching the contract.
Yes. Yeah, so be careful. Like we always want to make sure the client, whatever the client is buying, really meets the right criteria, not too risky for their situation. So yeah, whatever type of products that you're buying, we'll definitely make sure it's not too risky for you.
Yeah. So so our micro takeaway: if you decide to buy, then make sure you're going to buy the quality, not because of it's super cheap, not because you, like for example, like the Simon, you saw that they let's say they bought it at a very high price. Now it's very cheap price, and you want to take over that assignment, then you have to check the market price of that current home. It's not because of how much they drop the price.
Okay, makes sense. Okay, so we believe, like in terms of the buyers, the winners in 2026 will be these three categories. It's going to be the end users, the upsizers, and the long-term holders. Definitely like for principal residents and users, and especially if you're a first-time home buyer, there are so many like benefits right now. Like for example, if you're buying a new home under 1 million, it's like no GST at all if it's your principal residence, and if you're a first-time home buyer. Just as an example, and also like it's benefiting you because the prices are just much better than a couple of years ago, and it's not as competitive. For the most part, really depends on what you're buying, but for the most part, it's less competitive for you. So you can definitely take your time a little bit more and find exactly what you like. Also for upsizers, because actually I think we're going to go through each, but I'll just go through it here for now. So for upsizers, it also benefits you because the spread between the current property that you own versus the bigger property is generally less during a slower market. Because like if a 500K property drops 10% versus a $1 million property drops 10%, it's much bigger difference. And if both property drop 10%, the spread is actually less. And you have to pay, and you can pay a lower mortgage basically when you upsize. And that's all that really matters. Because you're switching properties. And for long-term holders, because like right now in these type of markets, like in the next 2 or 3 years, it's really uncertain whether the market will go up or stabilize or go down, like in the short run. But because asset inflation, it always happens. In the long term, real estate is generally always a good investment. So long-term holders will benefit as well, especially if you get a good deal in this type of market for a decent price. Yeah, like I talked about earlier, for the upsizers, the spread matters more than price. So just because like right now is a down market and you think you're going to sell your property lower than last year doesn't mean you shouldn't upsize, because the property that you're buying is potentially dropping a lot more than the property you're selling is dropping by. So as long as the property you're buying is dropping more than the property you're selling, it's a better deal for you actually, like I talked about earlier.
Yeah, can you give like a specific? Let's say you're gonna give an example.
Yeah,
Yeah.
yeah, for sure. So for example, if your condo is worth 600K and it dropped by 10%, it's basically going to be 540K. That's where you're going to sell it for. And the property you're trying to buy is $1 million. And it dropped by 10%, it's going to be 900K. That's this sold price. But let's just keep it simple and we don't talk about commissions.
Mm-hmm.
So $1 million, like before, if you can buy the property for $1 million and sell your property for 600K, the spread is 400K. That's last, like let's say 2 years ago. And now is you buy your property at 900K and you sell yours at 540K, which is less than before. The spread is only 360K. So for example, like you had a paid off property and you need to get a mortgage. Before you had to get a 400K mortgage to upsize. Now you only have to get a 360K mortgage to upsize. So you're actually like benefiting, even though the property that you own lose some value, the property you're buying lose even more value. So it's actually better for you.
Yep.
Okay, so whether to buy or wait. So it really depends on the product type, generally speaking, and like whether investor or an end user. But generally speaking, like waiting has costs too, right? Like so for example, like unless you're living at home, you're probably going to be renting, and that you're basically throwing that money away, and there's like zero chance of appreciating. And if your landlord wants to sell the property, you would have to move as well. So like there's a lot of uncertainty with that. And like in terms of life events, like if you're getting married, if you're moving out of the house, you generally need to purchase a home if you have like a traditional mindset. So if you just keep like are on hold and waiting and not buy, there's a cost there too, especially if you're renting. Yeah, and in terms of buyer mistakes, um, we want the buyers to avoid just chasing the headlines, because every day there's going to be some headlines, and it's generally like is trying to scare you or like is sensationalized to get your attention. Yeah, we would suggest you not to just every headline you read, you're going to change your mind or like have a different perspective on the market. we'd rather you take a look at the trends of the real estate board statistics, which we always put on our newsletter as well. Those are the actual data and numbers. And yeah, because like every little headline is not going to have a big impact on the housing market. Like sometimes they're just trying to scare you to get you to click on their article to get the ad money from you. Yeah, and don't compromise on the quality, like Ben talked about earlier. Like you want to be like sometimes like you pay a little bit more, and if it's still within budget, it's much better than getting a property that's like in a really bad neighborhood, for example, like on a busy street, arterial road, or in a really bad neighborhood, has a really bad layout, just for the lower
Yeah,
price,
it's not worth
especially
it.
if you can afford it. Yeah, it's not worth it, especially if you can afford it. And like when you sell in the future, it's also the resale value as well, right? If you have a good property that you really like, chances are somebody else will like it as well, instead of compromising and getting something you don't really like just for a lower price. Yep. And we right now for the investor market, the investors are generally shifting from like just speculating that price is going to go up every year or like for sure going to go up a lot in 5-10 years to underwriting. And what we mean by that is the investors are really carefully analyzing the numbers and risks before investing, like making sure it's as close to positive cash flow as possible. Yeah, and like if you have a bigger down payment, like definitely you want to have positive cash flow instead of just guessing or hoping that price will go up in 5-10 years by like double or triple. It's not that type of market anymore. Like just buying anything and holding for 5-10 years. So sellers should also beware that like the type of buyers are not just going to buy anything blindly. They're going to have to, it's going to have to make sense, the numbers.
Yeah, and make sure you have the exact plan as well.
Mm-hmm. And I'll pass it on to Ben to talk about what are the products that are working for buyers right now.
Yeah, I think 2026, we think these three types of home that might works for the buyers. Like the one is going to be the one bed stand, the second one going to be two bed condos, and the last one going to be townhomes.
Mm-hmm.
Yeah,
Probably in duplexes as well. I think duplexes will do well. It's similar to townhome.
yeah, but duplex is going to be a little bit more expensive. Of course, I mean
Mm-hmm.
if you do your own math, you're okay, financial ready, then duplex also would be a good product to be considered. But yeah, especially right now, like for some home buyer, they got lots of incentive, uh, like a first time home saving accounts, like you can withdraw money from the RSP, uh, and those will help you um, to purchase your first home a little bit easier than before.
Mm-hmm. Yeah. Basically, very livable homes for young people. It's basically what works.
Yeah, so you can see like one
Mm-hmm.
bed per stand, like two beds and townhomes. It's more like an entry level
Mm-hmm.
homes. Uh,
Mm-hmm.
yeah, so it's gonna be in these products gonna be much safer in today's markets.
Yeah.
Yeah, but what really that you try to be try to not avoid, but try to be careful, like the studios, and any if you're investor, then you make sure you don't want to buy something that has a negative cash flow. Um, I can explain a little bit more for studios. Like before, when the market was super hot, um, the price per square foot has going up like kind of crazy every year. Um, so if you want to buy a home, especially you want to buy like a newer home, then there's not many choices left. Like going to be one bedroom, going to be studios. But now it's the other way around. The market is not doing very well. So people they can afford a bigger home, then they will try to get a let's say if you can afford a one bedroom, why you want to choose a studio? So that's
Mhm.
why the studio might struggle in today's market. For the negative cash flow, this one's a little bit tricky because if you live in Vancouver long enough, you know that like not many property, especially residential homes, like even condo, townhomes, um, if you want the rents to cover all the expense, like including the home insurance, mortgage, and everything, then usually will have a negative cash flow. But why people still want to do that? Like first of all, like maybe they can, even though they have negative cash flow, but the rent can cover the principal of the mortgage, even though it shows negative cash flow on paper, but actually you are paying back the principal amounts of the mortgage, so you still doing okay by doing that. Uh, and the
Mhm.
second thing is uh, like back then people they just know that the Vancouver market is going to do well and the home going to appreciate faster, um, so they don't need to worry about the negative cash flow for the first few years. Because they know that like once the property appreciates, um, then they will make money.
Mhm.
But now we're not sure that how the market gonna like doing well in the future. We don't know when is going to be the turning point. Even though we believe like this year going to be a little bit more stabilized, but you just have to like watch the report, the data like very closely. Whenever there's a sign, a signal, then you have to adjust your strategy for the real estate like real quick.
Mhm.
Yeah. So for the risk management, then make sure you have the cash buffer, which just means you have some extra cash sent into the bank to deal with all different kinds of situation. Um, and you have to have your exit plan. Like some people they just want to buy and just leave it there, and then just like give it to the property management, and then um, they will think that after a few years, um, then they will make the money by appreciation of the product. Next, buyers versus investors. Um, David, could you cover this part?
Yeah, sure. Yeah, so I would say that they're just like a two completely different mindset right now. For buyers, we just mean the end users, like people who are buying for principal residence only, and investors are obviously just buying it to rent it out for long-term appreciation or for cash flow. Um, yeah, so yeah, I just got completely two different markets right now, and like it, like in our current market, there are still lots of buyers because people are still need a home, like whether it's like for life events, like just moving out of the homes, graduating, um, like getting married, people always need a home. But like in terms of investors, like they're much more cautious because the returns in the last year or so has not been good. Um, and buyers are a little bit more use a little bit more emotion. They have to like the home, whereas investors are purely looking at the numbers um, to judge whether they want to purchase or not. Yeah, just want to.
Mm-hmm.
I think for this part, we want to give the seller understanding of who is actually buying your home right now. Um, yeah, not many investors, unless it's really, really attractive, really a good deal. All right, Ben, can you go through this one?
Yeah. So in 2026, also there's some great rhinos that we have to watch out. Um, like for example, like the mortgage renewal. we know that like back in the COVID time, the interest rate was super low, and people they lock in like a 5 years fix with maybe like 1.9, the less than 2%. But this year, the loss of the contract going to be mature, and then they have to renew their mortgage. So they're going to be like a huge surprise that they will find out that wow, the monthly payment gonna be so much higher, and if people they already having financial difficulty, and especially when they come to the mortgage renewal, then it will trigger more people to want to sell. That means like we're going to see more people going to list their property on the markets. Hopefully, we're not going to crash the market, but still going to be one of the potential risk. Yeah, and the second thing is the investor exhaustions. Yeah, so which means in the past 10 or 15 years, people they always believe like real estate going to be a super good investment. Lots of people they make money from real estate, but however, because real estate was not doing very well in the past few years, and some investor they might want to rotate their investment like to something else, like maybe to the gold, or to the stock markets, or some other stuff like cryptos. The last one is going to be the rental supply surge. The reason for that is we saw many rental projects been approved in the past few years, which like we gotta have loss of rental supply. So that's not a good news for the investor, because when you buy a property, then you have to rent it out to collect rents to hold the property until it appreciates, right? But but when there are too many rentals, you have lots of competition out there. It's gonna make the rents are gonna be dropping more and more. Then you will have you will see a negative like cash flow for sure. And if it's that the rents that keep going down, then obviously that no investor want to even invest. They're losing the confidence in the real estate markets. But the bottom line is, as long as you're not over leveraging and you do your own math and you always have exit plan, then whenever there's a good opportunity, then you still can consider to buy. Okay. Yeah, so I think we just try to recap this. If you want to be the winners to this market, then make sure that you know what you're doing. Get all the accurate information to help you to make a decision. If you want to upsize, yeah, just do more research, be a little bit more patient, and if you're an investor, then you make sure you're going to follow your own rule, like be self-disciplined. Yeah. So for the final thoughts, we always say that nobody has a crystal ball. No one's going to know what's going to happen. The market going to go up or go down, especially like today's world. It's been changing so fast. You just need to be safe. Position yourself in a safe spot.
Yeah, we want to see if anyone has any questions for us.
Yeah, if you guys don't have any question, then this is the overview in 2026.
Yep, our outlook for 2026. Yeah, and like again, real estate is a very personal decision. It really depends on your personal situation, your financial situation, your risk tolerance, like your personal like living situation, right? Like so feel free to reach out to us after the session. We can give you a personalized assessment of what's the best way to move forward, whether you're a buyer, seller, investor. Yeah. Any questions?
Okay.
Okay.
Yeah, I guess that's it. Yeah. Okay. So thank you,
Okay.
everybody. Yeah. So this is today's webinar. So I hope that you can get something from the video. Sorry, the topic that we talked about today. Okay. Thanks, David.
All right.
So wait for our next
We
video.
can end it, I think. Yes. Wait for our next one.
Okay. Yeah. I'll see you later.
Okay. Bye, everybody.
Okay.
Okay. Bye-bye.
Bye-bye.